Good morning, Becky. After the closing bell tonight, index funds tracking the Nasdaq-100 will have to start buying SpaceX stock whether they want to or not. There are more than $800 billion in assets that directly track the Nasdaq-100, more than half of which from Invesco's QQQ. JP Morgan estimates that there will be about $4.3 billion worth of forced purchases flows into SpaceX by funds that have to reflect its weighting in the composite before it officially appears there tomorrow. SpaceX's weight in the Nasdaq-100 will be very small at first, less than 1%. And these funds will have to sell a little bit from the other constituents in the index in order to make room, but the impact will be spread out over the other names, so it shouldn't be noticeable. We've never seen something like this happen, though, at this scale so quickly after an IPO. Remember, several months ago, Nasdaq altered its rules to allow for a fast tracking of mega cap companies into its flagship index. Instead of waiting months with a double-digit float, companies that would have a top 40 market cap can be included after 15 trading days, even if they have a pretty small float. But SpaceX's weighting in the index will grow as its float does. We'll see that happen as the company starts to lift its lockup, allowing insiders to sell, and that could start as soon as next month. And then SpaceX may opt to do secondary offerings over time, which would bolster the float size as well. However, markets tend to front-run these rebalances, especially one as well telegraphed as SpaceX. So the expected forced buying may already be reflected in the stock price. It's up about 1.6% pre-market today, guys.